Hello, welcome to the Market Minute for Sunday, the 30th of July. I'm going to keep today's report really simple because I think this is what the market's trying to tell us. The market's trying to tell us that it wants to go higher right now for perhaps the second half of this year. We'll start off with the Dow. The Dow did all the heavy lifting off the bottom back last October. It was the first index to really escape from the bear. And then it went dormant as NASDAQ took over and took all the oxygen out of the room. And what we're seeing is that this inverted head and shoulders pattern is now breaking out to the upside. And this is going to make a measured move target very, very close to the all-time highs in the Dow. Now, if you look at this, this is also a fractal pattern, which is an inverted head and shoulders on a much larger scale, which would target well above there. Now, it's not all going to happen at once. We're closing in on weekly exhaustion on the Dow, and the daily exhaustion is already there. But notice how much potential energy. Think of this as a fuel gauge over here with full and empty. And imagine how much potential this thing has to run. Now, this is irrespective of all the news and all the chatter that's out there in social media sites. The market doesn't care about any of that. Doesn't really care about your logic with a recession right around the corner. Now, what does matter is the jobs report this coming Friday. If we start to see jobs tailing down, then we do know that the Fed has made an impact on the employment market with their higher rates. And that might actually be good because that means that we're that much closer to the end of the rate hike cycle. But that is this week's big risk. Okay, going from the Dow, now we're going to the NASDAQ, and this is something that I rarely ever see. When we go into severe exhaustion on this weekly chart, which we did back in June, normally what I would expect to see is a sideways to down retracement from there to restore the energy, or even an outright pullback on the first piece of bad news. What it's done instead is the more rare version of just continuing to grind. And in doing so, it's actually recharging on the fly as it maintains the uptrend. And we're also seeing this happening on the daily chart. The daily chart is going into this sort of stair-stepping mode like this, which can almost perpetually keep this thing on the fly. And of course, looking at the monthly chart, we have tremendous amount of energy left to go. So this is very, very strong, and it's probably not going to be too much longer before we're taking out the all-time highs on the NDX. Now, the S&P 500 is a little bit more of a conundrum here because it does have that weekly exhaustion signal down here. So again, where I'd normally be expecting the price to do is a sideways to down retracement. But it's just not happening in this market, especially coming from the escape from the bear market back in June. So it was just a couple of months ago that we flipped the equation from bear to bull, and there's still people on the wrong side of the trade right now, which is why we're still seeing a squeeze to the upside. So notice that the daily chart got a lot of energy. Weekly chart is in exhaustion. Typically, when a situation like this, I expect to see the price sideways to down, but we might see the same thing as the NASDAQ with the continued upside grind. Still a tremendous amount of potential energy left on the table so far for this trend to continue. Now here's the wild card. This is the Russell 2000. Russell 2000 typically has a lot of very small financial services companies, the small regional banks. It's also got small energy companies, and a lot of these have taken it on the chin as of recent, and they look to be restoring. So this was a very bearish pattern up until the March-April timeframe. That's a bear flag looking to release to the downside. This was ominous. But look what's happening now. It's consolidating underneath 2000. If it's able to get out and above from 2000, this could have a long way to go. And this is way behind the other indices, so it may play catch up here. Think about Russell assets. These are riskier assets, but if we start to see fund managers piling money into these, then that is going to be our tell for this market. This is that canary in the coal mine that fund managers are going full risk on. So I'm keeping the market analysis really simple today. The market right now is telling us that it wants to go higher. We don't know when that's going to end, but right now what we're seeing is the potential is there for much, much higher prices into the end of the year. That's it for today's Market Minute. Have a great weekend. We'll see you in the next one.